Hello and welcome to my channel. My name is Lyndon Wood. I share financial and money information and what I've become to understand. I started my first company at age 19 and I sold it 32 years later, so 4 years ago, to private equity. It was an insurance business, so in a regulated environment I now manage my own capital, and that's a key thing, because managing your own money for investment and for income, it means I keep my eye on the world and all the goings on that we are experiencing right now. What a time to be alive. So look, I'm going to share how Bitcoin and stablecoins can cut UK debt. The reason that's important, and stay with me, the reason that's important is because this will help you understand finance, money, and move your money around, swap a few things to protect your future and hopefully retire better off, not worse off like most people do. So this is not financial advice. I'm not regulated or authorized to give financial advice. So I will run through the information I have gathered so you have some more insight. So the UK's national debt is now over 2.7 trillion. That's around £40,000 per person, and it's growing every single day. Staggering numbers. The government solution: higher taxes, more borrowing. They cut services, but there's a third path almost nobody is talking about, apart from America, of course. Bitcoin and stablecoins. So in this video, I'm going to break down how crypto rails could reduce national debt, why the US is already testing this plan in plain sight, and how the UK is falling behind because missing one of the biggest financial shifts in history. We are in a financial shift. We are in a financial reset. It takes a few years for it to play out and for people to see what's happening and, of course, benefit. And, of course, with anything that is good for us, there's also bad actors that want to use it for bad. So stick around because this isn't a theory. It's already happening. The UK's debt trap. First, let's look at the UK debt problem. So national debt, 2.7 trillion and rising. The government spends over 111 billion pounds a year just on interest payments. That is to bondholders, which are countries that buy the debt and people that buy the debt. And of course, that gets added to the debt. So it's not spent on a single hospital, road or school. So don't be misled by that. So every 100 days, the debt grows by around 30 to 35 billion pounds. Shocking. We can't even imagine that number of zeros. We can imagine a million, but what's a billion and what's a trillion? The brain doesn't compute all those notes. I mean, normally governments have three options. They raise taxes. We're good at that. But that slows growth. They can borrow more, but that just kicks the can down the road. Or print money, which fuels, of course, inflation. That's more cost to you and me and everybody else. So what if there's a fourth option? Stablecoins, demand engine for currency. This is where stablecoins come in. Stablecoins are digital tokens pegged to fiat currency, the pound or the dollar, etc. Usually the dollar. So there's already over $160 billion in circulation, used by over 100 million plus people worldwide. And daily transaction volumes sometimes can be bigger than Visa, on some days. So that's a massive amount of transactions. So here's the key. Every time someone in Africa, Asia, or South America uses a dollar stablecoin, they're creating demand for the dollar, for the USD. Now, this is why you see a government in America, Trump, pushing American stablecoins, because it expands the dollar and the power of it. So that demand keeps the US dollar strong and indirectly finances US government debt, because more people who want US treasuries, debt, and US currency. So it funds it. If the UK had a digital pound stablecoin ecosystem, it could export pounds digitally, increase demand for sterling globally, and reduce reliance on foreign buyers for its gilts. But instead, the Bank of England has dragged its feet as usual. While the US dollar is weaponizing stablecoins in a good way for America, the UK is stuck debating central bank digital currencies, CBDCs. We just love it, don't we? Of course, that comes with its own issues, controls, and, like I said, bad actors, bad governments. But that'll be another video, maybe. So Bitcoin is a hard asset buffer. Now let's add Bitcoin to the mix. Why does it matter? Well, because Bitcoin is scarce. There's only 21 million coins ever. In fact, there's only around 17 million in circulation. The rest have been lost on laptops in skips in Newport. And it's proven itself as a digital gold with trillions in market value. I think it's over $2 trillion now. It's more volatile than gold, of course. It goes down a lot more and then up a damn sight more. Again, not financial advice. Every cycle, its adoption grows from retail investors, you and me, to corporations, businesses, to nation states. And in the UK Treasury if they allocated 2 to 5% of reserves into Bitcoin, then and BTC follows historic cycles, then that could mean hundreds of billions paid off the balance sheet, off the debt, and would certainly help the UK government and, of course, us as the people of the UK. So it could be enough to offset certainly a large chunk of interest payments. And it's a hedge against sterling devaluation. So the US is already considering this. In fact, they're doing it to some degree. Politicians are pushing for Bitcoin reserves in America. Even small countries like El Salvador have shown and proven what's possible. They're doing it quite successfully. So yet the UK hasn't even started the conversation. So it's a big missed opportunity, which seems to be the sort of storyboard for UK government right now, missing opportunities. So let's recap. Stablecoins could boost demand for sterling worldwide. Bitcoin could act as a balance sheet hedge. Together they form a new financial architecture that reduces reliance on taxes and inflation to service debt. And yet, the UK is doing none of this. Instead, we're pushing businesses offshore with heavy regulation and taxes. Because why would a business stay here if taxes have gone up? It's wiping out your profits. Why the hell would you stay in the UK? Of course, you're going to look at alternatives. And of course, when they move, they take their jobs, they take their spend, they take their investment, as we've witnessed in the last week alone. 2 companies, a life science business and, of course, Jim Ratcliffe's energy business, have decided to invest $4 billion in America and not here. And of course, that could be job losses. It's certainly investment lost. So London could have been the global hub for digital assets, as it is and was for the financial sector. Instead, the US, Dubai, Singapore are just racing ahead. And of course, people are moving there quite rapidly. This is more than innovation. It's about the future of UK sovereignty. If we don't adopt, we risk becoming financially irrelevant. The UK debt crisis isn't going away. But Bitcoin and stablecoins offer a way to buy time, restore confidence, and strengthen their currency. So the US sees it, other countries see it, but the UK just isn't. So will the UK wake up before it's too late? I think we're more reactive rather than being positive and moving forward and being front of foot. I think we tend to wait to see what happens and then try and fix things afterwards. Well, we can be quick to catch up, but let's see. If you found this breakdown useful, hit like, subscribe, all the usual gubbins. I don't make these videos for subscribers. Nice if I get them, don't get me wrong. I make it to share what I become to understand because I believe every single one of us should have a degree of wealth and not have to worry about how I pay my electric bill, which incidentally has just gone up 15%. How to pay the electric bill or how to pay your phone, how to pay your mortgage, etc. So look, I share to help and support. Subscribe if you want. Doesn't matter if you don't. Please continue listening. I hope you enjoyed that video and I hope it sort of built some knowledge. Next one coming up.